This is Christopher Lewis from the daily Forex.com trading desk looking at the dollar yen pair for the upcoming March 19th Forex session. As you can see, we have had essentially just a non-stop move higher, and this was predicated on a couple different things. Originally, it came about as the trade balance out of Japan was actually negative. That's almost never happens. It had been a couple decades since we'd seen that, and that was basically the start of the move higher. We got an announcement out of the Bank of Japan that they were also expanding their bond buyback program of JGBs, Japanese government bonds, and as such, that's akin to flooding the market with yen. So then we got the smash through. Now, when you look at this chart, and I will zoom out to the weekly, you can see that there's a little bit of a trend line there that we broke down, and there's probably a couple that could be made here, and this is the outermost one, so that's why I chose to focus on this. That's where I get this line from. And then 80, of course, I get this line from being so supportive previously and resistive. We actually had two central bank interventions that failed to close above the 80 as well. Back to the daily charts, you can see that we had broken above it, and I'll zoom in just a little bit. This weekly trend line that I had mentioned previously, we had broken above it and formed a hammer right there, showing that we had retested and found it as support. This is almost always the first positive sign of a potential trend change. Adding to that, we have moving averages on the chart. We have the blue 200-day moving average. Interestingly enough, really the move came on the day that we broke through the 200-day moving average. Was the same day that the Bank of Japan announced the larger than expected increase in the JGB buyback program. We also broke through the top of a shooting star, so the especially astute of the traders out there would have seen this breakthrough, would have seen this little bit of a doji hammer thing, and probably had a go at it, quite frankly. Personally, I didn't get involved until we got through the trend line and above 80, just simply because I wanted to make sure a lot of things lined up. When you trade counter trend, you need to be just a little bit more diligent than you do with the trend, and as such, you need to have a multitude of reasons to get involved. The 50-day moving average and the 100-day moving average have both crossed over the 200 as well now. So even the trend traders at this point, some of the larger firms that tend to try to hold on to these positions forever, are looking at this and saying it's changed, something's changed. So looking at this currently, I feel that this is a buy only pair, and I will continue, and I've done it a couple times already, to add to my position in small increments. I'm eventually going to build a massive position up as long as we can stay above 80. I think if we fall below 80, then we have to ask some questions. But currently I see last couple of days have been a little bit quiet, but we really haven't seen much of a pullback. This could become a bit of a consolidation right at 83 before we make a real attempt at 85. If we do break down, though, we have 82 that should offer support, and then of course 81 is right in the middle of cluster, and then obviously 80. So there are plenty of reasons to think that a fall will be somewhat capped, and if it does, it's probably just going to end up being a buying opportunity. At least that's my thesis, and that's what I'm going with until we are below the 80 handle.